I was a financial advisor. So I was actually very fortunate that in my experience, a lot of Black-owned businesses really paved the way for me. My dad's a Black-owned business. When I was a financial advisor, I was working under Black-owned business owners there. And I got to see folks really get into the bag, as young folks say, right? Really get into the money at all levels. White, Black, a lot of Blacks. And a lot of them had real estate experience investments as well. But I also got to see that there's other ways to invest in real estate, like REITs, R-E-I-T. So you can go about it many different ways. And I think between my education and my experience, I was able to see a bigger world than what is often presented to us.
Welcome to the Aid to Assets podcast, the ultimate podcast for aspiring real estate investors. I'm your host, Tiffany Watson. Join me as we discuss real estate investing for 9-to-5ers. We'll talk about everything from money mindsets and property ownership and different strategies you can use to invest in real estate. I want to empower investors, especially those of us who are working full-time, who want to navigate the world of real estate, uncover the secrets to building wealth, generate passive income to achieve financial freedom. Equip yourself with resources from experts, practical tips, and step-by-step guides on how to kickstart your real estate journey. We'll also hear from 9-to-5ers who started to build their own portfolios, what they did and how they did it, so you can do it too. Tune in and transform your main job into your biggest silent investor in your real estate investment business. This is your Aid to Assets. Hello, everyone, and welcome to another amazing episode of the Aid to Assets podcast. I'm your host, Tiffany Watson. We are here to help you, the 9-to-5er, start and scale your real estate investment portfolio. Here we get to talk to real estate investors who are also working full-time so you can hear how they did it and the professionals who help them do it. And so today I am so excited about my guest. We're going to learn all about the tax benefits of owning real estate. So before we get started, I'd love for you to go ahead and introduce yourself, tell the people who you are and what you do.
Hello, Tiffany. Thank you for having me, first and foremost. I'm Camari Ellis. I'm the founder of the Philly Tax Team online. Many people know me as the Finance Rebel. I've been in tax and financial services for over 30 years now. So I've kind of seen it all, done it all, been lost money, made money, the whole shebang. And yes, there's a lot of benefits to being a real estate investor tax-wise.
Love it. Very cool. So we got to start at the very beginning because your name is definitely one of the things that caught my attention. What is it that you are rebelling against with finance?
So I'm rebelling. So let me ask this question before I get going. Is this a family-friendly show or is this an adult show?
This is an adult show that stays friendly. How about that?
Okay. Because sometimes when I get talking, I might cuss a little bit. But I'm rebelling against the BS that's floating out there in terms of financial gems or tricks or plays, to say it, simply, right? A lot of times people try to, especially on social, try to make getting money, getting generational wealth to be this super duper easy thing. Like you just click your heels twice, snap your fingers, and boom, you're a multimillionaire and you have multi-generational wealth. But life's, as we all know, right? So there's ups, there's downs. I've experienced a lot of ups and downs, and I don't see a lot of that. So when I first got started on radio, people would ask me these questions and I would say, no, that's not true. That's not the best way to go. Sometimes it went along with overall industry standards. Sometimes it didn't. Mm-hmm. I have a love-hate relationship with the financial services industry because oftentimes I feel like they don't do what's best for their clients. They do what's best for their sales. So for me, I believe that it should be more stewardship and less salesmanship. And then we could all grow together. But I know it's a bit idealistic.
But it's good. And we need more people who I mean, if anything, that's why we talk about diversity in these spaces. We need more people who understand that there isn't just one way to do things. There's so many different backgrounds, experiences that people are coming up against. And so if we don't have the proper knowledge, if we don't have people that can relate to us, it's definitely going to impact the information that we receive, the decisions that we make. So very grateful for you and the work that you do each day, because it's definitely not always popular, for sure, especially when you go against the viral clips and the things that it just feels good. So 30 years in the business, you've seen a lot of ups and downs. We're currently in a state with our economy. We see just history kind of doing what it does. What is it have you noticed in this current climate, especially when it comes to real estate, that is impacting investors the most?
Well, the funny thing about real estate is, right, I've seen this trend for several cycles, right? Everybody thinks real estate is a cheat code, and it is for people who take it seriously. But it's not easy. There's ups and there's downs. Part of my journey, as well as I've been a property manager as well, used to manage a little under 50 doors, and I've dabbled in real estate investment from time to time as well. And so, let me back up. My dad is a tax accountant. I'm now a tax accountant. My mother and father separated, I don't know, somewhere in the 80s, right? What did he do? He moved out. He started house hacking. So now he has this term called house hacking. He bought a triplex, and he lived there, rented the other parts out. So I've been in and around real estate literally all my life. I was painting with him, hanging sheetrock, doing some plumbing, light electrical work, because my dad was also in the Navy, and he was an electrician as well. So I'm actually thankful for him, because I'm pretty handy, but I choose not to be voluntarily, right? I don't want to be swinging hammers and doing all stuff, but I can. But I've seen a lot, and I've heard the stories, witnessed the trauma that people have gone through. And it's like, all right, well, in the late 90s, we had a real estate boom. 9/11 came. 9/11 came, flattened out everything. Then we entered into another real estate boom. Then what happened? We had the Great Recession. 2000, 2008. Then from there, the Fed was just pumping all kinds of money into the real estate market in terms of the ease of getting mortgages. And then we have now, current day, post-COVID, things start to shatter. But, all that free money has propped up the real estate market, and we've seen housing prices go through the roof. And I mean, so much so people are not able to afford homes. Now, I'm not sure where your audience kind of leans towards. So most of my content is generated for Black audiences. Mm-hmm. And so we're also dealing with the advent of gentrification and why it's here and what's going to happen with it. And I don't know if it's going away, but all of those things kind of go back to real estate. So a lot of my clients are real estate investors. The ones who take it seriously invest in the down markets and the up markets. And I tell people all the time, you're not really about that real estate life if you're scared out your wits because interest rates are rising, or you're scared out your wits if the city that you live in changes ordinance, i.e., Airbnb, right? You figure out another way to stay in because you really love it and you're dedicated to it. So I hope that's not too much for you.
No, that's perfect. That's exactly why we're here, because one, we want people to understand what it is that they're potentially walking to. Like you mentioned, that real estate has been glorified as a cheat code. It's not easy, but it's definitely doable, and it can definitely make a difference. But before you jump in, you need to know what you're walking into and make sure that you can double down for the long term. Absolutely. So let's talk about why you have so many real estate investor clients. What is it about taxes that makes this a relationship that investors need to have?
So that's an interesting question, right? Because some people will tell you I hate real estate, but I get labeled a hater of everything: real estate, Bitcoin, anything. Anytime where I'm trying to share truth, my experiences, some of my clients' experiences, like I can tell you about times that, I manage properties and I had tenants get evicted, they break back in, they demolish the properties, defecate on the floors, punch holes in the wall, urinate on the floor. And I'm like, that's not easy, yo. That's not easy. So your heart's really got to be into it. But to your question, the tax code, right? One of the things that makes real estate really attractive is the tax code. And I tell people all the time, this country was founded on entrepreneurs and real estate owners, right? The farmers were real estate owners. I mean, our country was very much agricultural based for the most part in the 1800s, early 19th century, right? It's all about growing food. People ate off the land and then sold the rest. So a lot of tax advantages are baked into the tax code. So I think it will behoove anybody, if they're looking to build wealth for themselves, for the next generations, to pursue real estate, but really do it. Really do it. I mean, like, educate yourself and get good mentors, not just these social media gurus who say they are mentors.
We gonna circle back to that. Because we can tell you got strong opinions about No, I'm here for it, because first of all, we already know we are newer to this than a lot of our counterparts. And so for many of us, we are first-time homeowners, first-time investors. This is new territory for us. And then to be taken advantage of, it's already going to make you not want to do it anymore. And so people need to understand the importance of vetting, what to look for in a mentor, how to be able to identify who is just really good at marketing versus who really has the knowledge about what they're doing. So we're going to talk about that for sure. But let's make sure we set the stage so people understand the majority of our audience here are full-time employees, particularly high-income earners. Why do they need to really know about the tax benefits? You mentioned that the country was built off of entrepreneurship and real estate investors. How does that apply to now, where we currently are in today's society?
Well, in my opinion, so I'm probably older than some of y'all, your audience, right? So they're going to call me like grandpa, uncle, something like that, right? So I believe in like going back to the foundation of a thing, whether it's today or yesterday or 100 years ago, because when you can understand the foundation and how we got here, it will give you direction on how it could potentially go. Real estate generates jobs. Real estate helps to keep the economy going. I forgot what it says, like for every dollar invested in the real estate, like I forget how many jobs are made or created from that. And the economy, the government needs a stable economy, right? That's one of the things you need to not have people running around naked in the streets because they got some money and they got a job, they got something to live for. But, as the IRS was created, they're like, well, how do we incentivize people, right? Because the tax code really is all about incentives and disincentives, things they want people to do to help the economy, because that's what it is, right? How do you help the economy? Real estate helps the economy. Businesses help the economy. Why? It all leads back to jobs, right? The government wants jobs. And so there's so many tax breaks for real estate investors. It's crazy. But there's also a lot of nonsense floating around social media talking about what you need to be a real estate investor, whether it's having an LLC. Well, you don't need an LLC to be a real estate investor. I'm not a lawyer, but I've kind of done this for a while. And I hang out with a lot of lawyers. So I always fact check, right? I believe in going to advisors and having good people to bounce ideas off or get your information from. People that aren't necessarily in this to sell you a course. They might charge you a fee for a consultation, but their business isn't to sell courses. It's to empower their clients. And so I think that's really important.
Got it. So let's start then on the side. Let's talk about some of these myths that we hear online about real estate investors. What are like the top 3 that just boils your blood that you want to debunk for listeners?
I only get 3. Well, I just said one, right? LLC. You don't need an LLC to be a real estate investor. Actually, I discourage people to form an LLC if you're just starting your real estate investing career. Why? Financing is usually easier as a person using your social security number. FHA only requires 3.5% down. Usually, that gets a little bit tricky, but for the most part, it's 3% down. And normally your people are working 9 to 5, just trying to get their first leg up. You can take that, because I think everybody, young folks, should house act, kind of like my dad did. It's work. It's work, but I've seen the benefits of it. My dad's, and I'm going off on a tangent a little bit. My dad's 70, he'll be 78 this year. And he was like, well, if it wasn't for this building and another building he has, I wouldn't be in good a position because the tenants are paying his rent. The tenants are subsidizing his cost of living. And so now it's like, I've been able to do some things that I didn't have to pay a whole bunch of rent. But you asked about the myths. So one is LLC. Let's see. What are some other ones? Let's see. Another one that burns my butt is everybody should be a real estate investor. I don't think everybody should be a real estate investor. And I know that probably sounds crazy, right? We're on a real estate show. But again, if your heart's not in it, I don't think you should do it. I think you should take your God-given gifts, talents, and abilities and apply it to what you really love. And then, if it's real estate, great. If you want to do real estate as a hobby, that's great too. But if you don't love it, you might want to at least seek other help, right? Try to think of some other ones because you catch me flat off the top of my head. Those are two. Okay, here's one. Well, here's one nobody ever talks about. Running your real estate investment as a business. People just kind of, they, and that's not a myth so much, but that's something that boils my blood. They get the money, they get their rents, and they just spend it on their daily living. Listen, the name of the game, if you're really serious about this, is living beneath your means, meaning spend less than what you make. And so if you got a real estate investment and I don't know, you make $500 a month extra in cash flow, after everything's paid, that doesn't mean you have $500 extra to go spend. You should sock that away and develop a savings account for that property or properties. But, a lot of people aren't talking about that.
That is so good. So I want to go back and unpack a little bit because first, you mentioned everyone shouldn't be a real estate investor. I wholeheartedly agree. As an agent, as an investor, I wholeheartedly agree. Everybody's just not built for it. Everybody's just not interested in it. And then when you see a lot of issues in the market, many of it is because of people who had no business being there in the first place. So in your experience, what are there traits or characteristics of people where this is for you that you seem to be very common?
I'm going to tell you, some of my contractor friends who leverage their contracting abilities, whether it be carpentry, electrical, plumbing, and then kind of transition and apply that trade in real estate, tend to do a little bit better because they're already immersed in the process, right? You hear some people say everything kind of goes back to real estate. Well, it kind of does to a certain degree, right? Whether that electrical is in a building, that building is on top of a plot of land. That plot of land is real estate. So, they're able to translate that, what they're doing, their 9 to 5 for their business, and then apply it to their investment portfolio. So that probably is the number one. Real estate agents tend to do pretty good too. And that's because they're always in the market and they're always seeing things. I have a buddy of mine who got this great deal in Philly. And I don't talk about my clients, but I'll just say this. He found this great property in this great area of Philly that he got 3.5% down, probably a $700,000 piece of property that will easily appreciate to $1 million. And it's in a part of town where a lot of Black folks don't have a lot of real estate. So I just marvel at that every time we talk about it.
Mm-hmm. Mm-hmm. Okay. Now let's talk about running your real estate investing like a business. What does that actually mean?
Well, one, not, what do they say? Don't eat the seeds, right? Eating all the money
Right.
or spending all the money from your real estate investment, spending all the money from the rents. But I would say run it like a business. Have a bank account. It could be a business account. It could be a personal account, right? But just have everything go into that account, whether it be your expenses, whether it be your rents. Have everything go into that account. And then keep track of those expenses, whether it's using an Excel spreadsheet, QuickBooks or some other software, bookkeeping software. That's one thing I would say is running as a business. And also educating yourself. Like, you constantly have to educate yourself because real estate laws change all the time. Like I was talking about earlier, Airbnb, Verbo, this whole short-term rental market that everybody was saying, oh, we got to run the play on. Well, guess what? Cities across the world, not just in the U.S., are like, no, you're messing up our money. You're messing up our cities and some of our neighborhoods. And then the hotel lobby, to be exact, is like, no, y'all messing up my business too. So now, you're getting there, you are solely reliant on Airbnb. And I do like Airbnb and some of those things because as a business, right, the number one thing in business is cash flow. So sometimes, not all the ways, right, you can generate or you can increase your cash flow using some of these other tools like Airbnb, but they're just tools. They're not end all be all. But I know people that bet it all on Airbnb and Verbo, and I think there's a couple other out there floating around too. But no, just staying up to date about the education that's going on, and then being a good student. So to me, that's what it takes to be a good business owner. The last but not least, I'll say knowing when your tax filing dates are. Right? This is one thing I run into all the time. Me and my girlfriend are going to go in on this property together, and we formed the LLC. So that tells me right there two things. That's no longer in the jurisdiction of a personal investment, right? When two people come together and they form an LLC, it's usually a partnership LLC. That tax filing date is March 15th. It's not April 15th. Everybody's kind of trained to say April 15th because that's when their personal taxes are due. But it's March 15th. And when you miss those filing dates, the penalties are heavy because it's no longer for a person, it's for a business. So I've seen it happen a million times. And I guess the one other thing that comes to mind, talking about partnerships, right? Everybody's not meant to be a partner. And it's just like marriage, right? Yeah, you might meet a nice guy, a nice girl. They might be cute, appealing, might be smart, but some of their values might not line up with yours. And so in the long run, yeah, y'all might look good. Y'all might look sexy, but at home, it's breaking down. The foundation is going to crumble sooner or later. Unless, you're able to kind of get on the same page and have some of those same values or create some of those same values together. But normally most people are not willing to make that kind of change, especially late in life. So I would just say be very, very careful about who you're doing business with, how to set up the business, and what are some of the things you got to think about when doing business with other people.
Love that. So when we're thinking about, especially how to set up our business, at what stage do you recommend individuals come to someone like yourself to make sure that they are set up properly, they know the deadlines, they're doing all the things for their taxes? When is there a certain level or amount or number of properties? How does that work?
First property. Start there.
Okay.
Make sure you're maximizing, right? Make sure you understand all your deductions. I see a lot of people miss out on depreciation. And what is depreciation? Depreciation is the way that homeowners, real estate owners are able to write off their property, but it happens over a course of years, sometimes decades. And a lot of times that is an expense that is missing on many tax returns. So the other thing you got to do is you got to make sure it's somebody who at least has an understanding of what's going on. A lot of people don't have an understanding. Like right now, I'm not currently a real estate investor per se. All my friends are though, right? One of my biggest clients is a developer. I'm in Philadelphia. They're in Kansas, right? I go there usually a couple of times a year to help them out and file their taxes and give them some guidance on how to handle some of these projects that they do. But it's just really figuring out who you can work with.
Okay. Now let's talk about that. What's that vetting process? Especially if, like, let's say, I've been a TurboTax girl, and we've been doing these returns just fine. But now I just bought my first house. And
Okay,
so I've been
congrats.
hearing a lot about now I need to get a tax strategist or a tax advisor or something like that. What does that process look like to figure out who is the best person to help me?
Well, first of all, since our audience is Black, let's talk about it, right? We don't want to go to nobody at the back of a gas station, all right, and get your taxes done. I mean, this is real rap. This is stuff that I run into.
I know some, so I understand.
Yeah. And listen, like, that's no shade on anybody, right? Because some people that's just where they're starting, but they have all the intentions and they're smart to be a great tax professional. However, intention and execution oftentimes are misaligned. So that's
Say
something.
that again. Wait, let's go back. Say that again.
Well, what I say?
Intention and execution.
Yes, intention and execution are often misaligned. So you gotta make sure the execution is in place. And yeah, I would say you should at least sit down and have a consult with a real tax advisor. It could be an enrolled agent who are licensed with the IRS, a CPA, a certified public accountant, who are registered with each state that they work in, or a tax attorney, right? But any of those three people can give you some guidance on what you should be doing. I'm going to tell you right now, the number one thing you should be doing is having great books. You want to keep good books, because the better your books, the better you're able to write everything off on taxes, and then to plan on how to take advantage of other tax deductions and expenses and strategies under the law.
So now you mentioned tax preparer, tax attorney, tax advisor. What can you go break down the difference in each of those, and if there are others, and how people should decide who they want to work with?
Yeah. Well, so it's a little deeper than that, but yeah, I'll do my best, right? So you have what's called unenrolled preparers, right? Those are people who do not have a designation. They're not a CPA, they're not an enrolled agent, and they're not, let's say, a tax attorney. So those are the big three under the IRS, right? So I'm an enrolled agent. I went to school for finance, and it just so happened that my journey, I don't know if it was God, the universe, whatever you want to call it, led me back to tax. So, because I've been a financial advisor, I've been a portfolio manager on Wall Street, but it just brought me back to tax. So I have, in my opinion, I have a different skill set than most tax professionals, because I lean more to the finance side. But my dad was a tax accountant, so I was at his office working there for many, many years. But to answer again, going deeper into your question, right? Then you have CPAs. Like, CPAs are the most known. They're the most popular, right? But CPAs are not necessarily tax people. Tax is only one small part of the CPA's requirement, right? The CPA has like three or four requirements, like ethics, regulations, and forget the other things, like audit or something like that. But I get CPAs who refer business to me, because all CPAs do not do tax. However, there are some good CPAs who do tax. The way I say it is, CPAs are the kings and queens of accounting, right? And accounting, tax is a small part of that. Enrolled agents are the kings and queens of tax. And so, and again, every practitioner is going to be different. Listen, there are some enrolled agents who aren't worth the gum on the sidewalk. There are some CPAs who are not worth the gum on the sidewalk. Same thing for tax attorneys. They are not. But that's where you can kind of start looking and deciphering the universe there, where you want to go. And then, you can really see, well, there are some accountants, tax accountants, who really specialize in real estate investment. That might give you a good clue. Also, you want to see what other people are saying about them. Don't use it 100% as saying, oh, I need to invest with this guy, because a lot of times FOMO or popularity, right? Like, a lot of times we never really get past high school thinking and maturity, because we always still want to gravitate towards the hot and popping thing. Well, sometimes that's not what you really need. You need somebody who's really solid, understands it. Might not be the most popular thing. And I say that because, and I'm jumping around on you a little bit, a client of mine say, Camari, you would really be popular if you did some of the antics that some of these people do. I'm like, but those antics don't really align with me, who I am. And you already know that because you've known me for years. But I get it. They love me. They want me to see me do well and do better. And I'm open to things, but I'm just not open to the ratchetness, so to speak, if that makes sense.
It absolutely does. And you skipped over that. So now I want to go back because you told us about the property management experience that you had and that you had this love-hate relationship with finance, but not that you were actually in this world. No wonder you're such a rebel about finance and advisors. So I want to hear now, how does that experience help or impact the conversations you have with clients, especially as you're helping them navigate the world of taxes? Hey y'all, Tiffany here. Are you looking to purchase or sell real estate? As you know, I'm your aid to assets, and I want to help you with all of your real estate endeavors. Whether you're local here like me in the Fayetteville, North Carolina area, I can then help you purchase or sell your next property. If you're looking to purchase or sell outside of North Carolina, let me know too. I can still help you. I have a team of agents all over the country that I can connect you with to partner on your next deal. Let's get to the closing table, y'all. We buy our way to wealth, whether that's buying right or selling better. Can't wait to hear from you. Click on the link in the bio if you want more information on how to personally work with me or an agent on my team. Talk to you soon.
I've just seen it for so long, right? Think about Tiger Woods. He started golfing when he was like, I don't know, 3 or 2 or something like that. Him and his dad, we don't got Tiger Woods money, but I've been around and I've had a lot of time, got my 10,000 hours. And as you brought up, I was a financial advisor. So I was actually very fortunate that in my experience, a lot of Black-owned businesses really paved the way for me. My dad's a Black-owned business. When I was a financial advisor, I was working under Black-owned business owners there. And I got to see folks really get into the bag, as young folks say, right? Really get into the money at all levels. White, Black, a lot of Blacks. And a lot of them had real estate experience investments as well. But I also got to see that there's other ways to invest in real estate, like REITs, REIT. So you can go about it many different ways. And I think between my education and my experience, I was able to see a bigger world than what is often presented to us.
Yeah, absolutely. So what are some of the questions if a potential client came in and asked you that would lead you to believe they were serious about being a real estate investor and would be someone you would be excited to work with?
Oh, that's a great question. But do me a favor. I want to go back because I feel like I didn't answer your previous question. You asked me about who should people work with. So one thing I think everybody should check for and know about is, does your tax professional have a P10? Because there's a lot of fraud in the system right now. And sadly, a lot of times people don't know how to vet, as you said, right? So do they have a P10?
A P10?
Yes. So it's professional tax, wait a minute, prepare a tax ID number. Professional tax is something like that, but it's the number that everyone who does taxes professionally, that gets paid for it, is supposed to have with the IRS. So no matter if you unenrolled, enrolled, CPA, tax accountant, everybody should have a P10. Now, I bring it up because there's an issue called ghost preparers, where they'll file the taxes for you. You'll pay them. They'll do something like file it through a TurboTax or some of the other online things, but they won't sign it. And since they don't sign it, they're not responsible. There's no accountability. I'm accountable to the IRS, right? Every 3 years, I have to renew my license. They see if I've done a certain level of continuing education, if I've had any crazy things, any charges against me or things like that. They can strip my license from me if I do any of those wild and crazy things. If these people, these ghost preparers, are not registered, they don't have anything to lose. They don't have the answer to anyone. So That's something I think people should always understand. And I get it, you might have a cousin you feel is really good at math and they can handle these taxes, but there's usually ethics component that you got to think about in there.
Got it. Oh, got it. Okay, so make sure that and we can just ask, can you
Yes.
show it or tell us what your P10 is, or how does
And you
that
should
work?
be able to look them up on the IRS site.
Okay.
IRS.gov.
Perfect. Okay, so we're vetting our CPAs or tax professionals, whoever we're using, y'all. As tax season starts to come up, make sure that you are looking to see that they are properly trained and certified to be able to be held responsible for your taxes. Okay.
Absolutely.
So now circling back to what we mentioned before, what questions would a client come in and ask that you would know they're serious and I'm excited to work with them?
That's a good one because I can tell. I'm old, y'all, so my spidey sense is fine-tuned. If they're thinking about it as a really quick thing, like a quick flip, not flipping, but just a really quick thing to get in and out, but they're not really serious and they're not thinking about it in the long range, I can kind of tell that they're only really about it to make money. And let me clarify, because I'm sure everybody that listens to this wants to make money.
Because my eyebrow was about to go up. So
Oh, yeah. Listen, there's nothing wrong with making money, right? But I believe that there's certain things that you wouldn't do just to get $1. You're not going to kill your mommy or your auntie or your nana or your pop-pop, something like that. No amount of money I would hope that no amount of money would allow you to mess with their safety, their lives, or anything like that. There are some people who give, I'm trying not to cuss. There's some people who don't care, right, at all. They will sell out everybody for $1. So, you gotta be careful about that. But again, people who are seeking or have seek mentorships, people who are in real estate leagues or professions or clubs, right? They're surrounding themselves, they're immersing themselves into the industry. Those are the ones who I can tell are serious.
Okay, that's good. Now let's talk about the benefits, because now we're telling people that not only do they need to be a student of the space and really
First of all, you need to be a
really
student, everything you want to be great in. But
agree. Listen, the former teacher in me wholeheartedly agrees. So you are a student of life. So I get it. So we need to be a student of this new space that we're going to be in. We also need to properly vet the person that we're going to be working with, which ultimately means we may have to go through a couple people in order to find the right person. Why am I going through all of this? What is the light on the other side that is making all of this worthwhile?
The biggest real estate investor in the United States of America is this guy by the name of Sam Zell. Like billions and billions of dollars of real estate holdings. And he's owned them personally through REITs, all kinds of crazy stuff. Ultimately, for most of the real estate investors that I know take it serious, they want to make some money, but for the majority of them, it's really about their kids, next generations. They just love the space. And if some of them are actually very conscious minded too, right? So some of them, this is rare, but many of them buy real estate to make sure that our people have affordable housing. So there's so many different ways to go to this, because everybody needs somewhere to live, right? So some people are just like, well, I just want what the market bears, even though the market and real estate prices have gone up, but wages have not gone up in the same clip. So there's a disconnect. So there's a lot of our people who are struggling.
Absolutely. Now, you mentioned REITs a couple times. So for listeners who may not be as familiar, can you talk to them about that?
Yeah. So REIT stands for REIT, Real Estate Investment Trust. And to be a REIT, it goes back to taxes. It's part of the tax code. And so in order to be designated as a REIT, you have to pay out, I want to say 90% of your profits to your investors in order to be classified as a REIT. And by paying out 90% of your profits means you don't have to pay tax on your profits. So you get to avoid that tax bill altogether.
And so why is that a benefit to me as an investor?
So as a benefit to you as an investor, typically REITs have other professionals who are who's doing all the due diligence, the day-to-day, fixing the plumbing, renting the property out, paying the tax bill on it. So you don't have to do it. It's a passive investment for the most part. You don't have to do anything, but you are now a real estate owner, a real estate investor by getting involved with it. So you got to get the best of both worlds, but you don't have all the headache. Now, anytime that your risk is reduced, your return is reduced as well. So you may not get as much money. So if it's, let's say, a property yielding $1,000 a month in rents, and it's just hypothetical, y'all. This is all make-believe stuff that I'm coming up with, right? Your portion of it might only be, I don't know, $50 to $100, because everything's been stripped away from you. I mean, not stripped away. That's a bad word. Everything, all of your responsibilities have been taken off the table. So all you got to do is put your money up. What's that?
You've been relieved of all the responsibilities.
Yes. The teacher in you. I love it. Yes.
Okay. So now let's talk a little bit if we're continuing thinking about these benefits. So many of our investor listeners, they are W-2 employees. And so Uncle Sam is killing them right now. And so we hear a lot about, this is another great reason as to why we need to invest in real estate to help to keep more of our money. Talk to us about how that actually works.
That's a tricky one. Now, you said a lot of your listeners are high income, right? So once you get above about $150,000 in, let's say, income, some of your rental losses can be capped. So the reason why that happened is, like, in the 80s, there was a lot of doctors and lawyers who were buying real estate as a quote unquote tax shelter, right? They're like, all right, I can put money into this asset. It'll appreciate over time, but I can get tax breaks all along. Well, the IRS isn't dumb, right? And most people aren't smart enough really to combat the IRS. So they said, all right, well, we see what's going on here. We're going to create a cap where that when you start making over $150,000 a year and you've got these large losses on your real estate, we are going to cap that. And they do what's called a loss carry forward, not to get super technical and bore your listeners, but you may not be able to get it all in the first year. You got to carry it over several years, and you may only get it if you sell the property or you just take a little bit of it every year, unless you are a full-time real estate investor. And that designation is a little hard, right? So to be deemed as a full real estate professional by the IRS, you have to have 750 hours. It needs to be your primary income. And when I say 750 hours, you have to work in this for 750 hours a year. It needs to be your primary income. So real estate needs to be your primary income all year round. So if you are a 9-to-5er and you do real estate, but your primary income is your job at the bank or, in a marketing firm or major corporate 500 company, it might be really hard to do. So you don't get the full bevy of all the real estate tax deductions.
Got it. Okay. So we know that you talked about a little bit about depreciation earlier in the episode, and that was one of the benefits. Are there any other ones that individuals need to make sure as they kind of check their tax professional or whoever they're working with that they are also considering as part of their strategy?
All of them. So anything that you do to make money in your business can be considered a legitimate tax deduction. The IRS has a term called, I ain't had on my coffee this morning. Ordinary and necessary. Sorry, y'all. An ordinary and necessary expense, right? So any expense that's deemed ordinary or necessary or necessary can be used as a write-off. For example, insurance is ordinary and necessary for your real estate business, right? Travel a lot of times, right? If you're going back and forth to Home Depot, the mileage you can write off of that, right? Paying your tax professional or your accountant is a legitimate write-off that you can write off against your revenue or your rent, right? any licenses that you might have. Trying to think off the top of my head. Advertising, right? Let's say you got to advertise to get the property rented out. That's ordinarily necessary. Now, if you are doing a showing, maybe you bring coffee. I keep talking about coffee. I need my coffee. Coffee or bagels or food, right, to the showing. You can write that off, right? And Tiffany, you're a real estate agent. You can write off some of those same things as real estate agents as well, right? Depreciation, no, but everything else I just said, yes. So, all those things come into play, and you want to really, really, really organize and categorize these things throughout the year so you can take advantage of all your tax benefits. Listen, I know it's probably tax season when this episode airs. If you have not done tax planning, it's too late now. You want to, well, it's not too late. It's too late for this tax season here, right? The tax benefits, usually you have the most power to exercise your tax strategies or your tax planning before December 31st. Now, all is not lost. So once you file your taxes this year, what you should be doing is going into immediate tax planning, tax strategy mode. Find you a good tax pro, pay them. And by the way, tax preparation and tax planning or tax strategy are two totally separate things. So, after your taxes filed, then find you a tax accountant, pay them, and do a tax strategy with them. It could be something as simple as you work a 9 to 5, put more money into your 401k, make sure you track all your expenses, looking at shoring up your cash so the next time you go to buy another property, you're good to go. Because, once you get, two or more, you're now kind of deemed a commercial investor, commercial, not lender, I'm using the wrong word. It's usually considered a commercial mortgage. So they often want bigger down payments. So all of those things come into play.
Camari, now see, you about to open up a whole can of worms because
I'm
now you're talking about tax planning, and I wasn't even going to bother you with that because that is not a conversation we have regularly. Usually we file our taxes, we get our tax refund potentially, and we go spend that money and keep it moving. So tell us what tax planning. What are we doing now, sir?
Well, wait a minute. You asked me earlier what boils my blood. So,
I was ready. I was excited. That's why I said
one of the things that boils my blood is some of these big box tax shops have programmed the market to think about and care about tax refunds.
Yep.
I don't care about a tax refund. And let me clarify. I mean, when I say that, I mean that I only care that your return is done accurately and lawfully. And if you get a refund, great. However, if you owe, that's part of the game too. It's just like being a professional athlete on like NBA or anything else. Some games you're going to win, some games you're going to lose, right? But at the end of the day, if you want to be in the game, you got to be in the game. And you got to be prepared to win or lose as it relates to a tax refund. But tax planning versus tax, I need to make a video for this. Tax planning versus tax preparation, right? So you have to prepare your taxes every year, ideally before April 15th, if you are a person. If you are a business, like an LLC partnership or an S corporation, your taxes need to be done by March 15th. So you have these, what do we call them? Compliance dates that we must adhere to. So we don't get in trouble with the IRS, because when you're late, you get, what do they call it? Failure to file penalty, failure to pay penalties, and then all these penalties, and these are the exact terms. So I know that's not exciting, y'all, but I want to give y'all the real. All of those penalties come with interest. And so the IRS is they're like loan sharks when you really think about it, right? Because they're like, all right, you didn't pay your taxes. This is what you owe. We're going to apply a VIG or a penalty amount on top of it, and you have to pay more. At the end of the day, it comes to paying more. You just want more. So it behooves you to file your taxes early and on time. A lot of people, though, file them late. So it gets a little crazy. But yeah, you need to file your taxes because every year that's what the IRS wants. The IRS wants you to file your taxes to say, hey, this is the money we made. These are the expenses, deductions, and credits that we have. And so we either owe the IRS money or they pay us a refund. Now, tax planning is saying, hey, we know the IRS wants all our money. They want more, right? They don't care if you just had a new baby. They don't care if your roof just fell in. They don't care if your car just broke down. They want more. So you got to keep that in mind. But all this stuff is published. We know the IRS's playbook. We know that you can write off insurance. We know that you can write off licenses. You know that you can write off cleaning and maintenances. And so it's like, well, am I using all these deductions? Have I thought them through? Am I tracking them? Do I have a good way to go pull them up if it's time to do taxes or if I get audited? Because being audited is always a possibility. And basically what an audit is the IRS will go through all your expenses with a fine-tooth comb and say, hey, this is good or this is not. And they want you to do, and this is a fancy word, y'all, substantiate, basically prove that you did these things. So, organization is a real cheat code. So, keep that in mind. So yes, there's tax planning and there's tax preparation. They're two different things. And you have to approach them both separately. But no, we are all programmed to think about tax refund and tax season. The real power in taxes, though, is after tax season. From, tax season ends, let's say May of each year. Tax planning season or the next tax season starts May till December. So you should be planning and strategizing and executing and then doing it all over again because life changes and your tax situation changes all the time.
Love it. So I'm hearing a common theme, and if we're going full circle back to where we started. It's basically we need to make sure that we are keeping organized and keeping track of our expenses because we can be leaving so much on the table because we don't know what we spent, where we spent it, how we spent it, and being able to look back on our year. It's a long year when you think about how much money we spend over a course of that time.
And
having a record of that.
They know that, right? As I said, the IRS isn't dumb. Now, Congress is the IRS's daddy, right? Congress runs the IRS. A lot of people don't really realize that. Now, Congress might not be that smart, but that's a whole other conversation.
Sir.
I'm just saying.
Okay,
Part
so
of the
y'all.
reason why I'm called a rebel is because I tell it like it is. I don't want to sugarcoat anything.
Absolutely. And I support it because we need to have these conversations. Part of this podcast is to normalize these conversations that we don't always have in our households and to be able to understand if people have never heard about tax planning. Now, this is something where you can go and start to research, start to ask, do you tax plan? Do you know what this means? And put yourself in position to win. Because if not, life is going to continue to life. And if we don't properly position ourselves to be a winner in it, we're just going to continue to lose.
Facts.
Love it. Well, this has been absolutely amazing. So 2 more things before we get out of here. The first thing is we like to do a bit of vision casting here on the show. So normally I ask people about their business, but I got to ask the rebel though. A year from now, 3 years from now, what do you see could be true in terms of finance education in our communities?
I'm scared to answer that question. I don't think it's going to change.
Really?
People find money. Yeah, people are afraid of money. They find money boring. I mean, talking about money all the time is considered, what's that fancy word? Gauche, right? It's rude. It's not. And that's on many levels, right?
Mm-hmm.
But I find that the people who make more money don't have a problem talking about their money. It's only those, especially those in our community, because it's like, it's a badge of honor to make more money. So we might talk about it, we might not talk about it, but we also know in our communities, having money a lot of times comes with other social issues. I'll just leave it at that. Everybody can fill in with their imagination. But there's a lot of things that come along with that, right? And so, but what I find is for our people who are more financially astute, financially fluent, they'll talk about money. They'll talk about their credit scores. They'll talk about, oh, that's another one that boils my blood, but I'll come back to that. They'll talk about how much money they made. They'll talk about the negotiations they did on their job to increase their salary, right? Because a lot of people think, oh, I need multiple streams of income. But when they work on a great job, and they're like, they never think, how can I get a higher raise? What can I do to be a bigger asset? What can I do to get more skills on this job to make me more marketable? And so, there's a lot of things.
Okay. So what I'm hearing you say is you just got to come back because we need to have another conversation about money mindset and just how we can become more financially savvy. Is that what I'm hearing? Did I hear that right?
I would agree. Yes. Let's do it.
Okay.
I'm having a good time.
Yes, I love it. It's so important and it's so key. And if we don't have these conversations, we're just going to continue to be ignorant. And anywhere we're ignorant in, we're going to lose in. So I just thank you so much for your time. Tell us, how can the people find you? Do you have anything that you're working on where they can tap in and learn more? All the good stuff.
So I'm working on a book. It started as like an ebook so I could help a lot of my clients know what in the world they should be doing, what they shouldn't do. But now it's kind of expanded because then I started going back into my trauma of all my experiences as a property manager or helping clients solve their tax problems. So I said, I'm going to make this a book. But I'm working on the ebook, and that's going to be at taxrei.co. Again, taxrei.co. You could always find me on my show, The Finance Rebel Show, as well.
Love it. So y'all, we will have that information in the description. Be sure to check that out. Camari, thank you so much for all of the information. This has been phenomenal. Can't wait to have you back.
Yes. I welcome the opportunity.
Amazing. Well, y'all, this has been another episode of the Aid to Assets podcast. Be sure to hit that like and subscribe button so you can be notified about all future episodes. We'll see you at the closing table. Thank you for tuning in to another insightful episode of Aid to Assets. Remember, your journey from 9-to-5er to successful real estate investor is within reach. Keep learning, keep growing, and keep investing in your future. If you'd like to know more, connect with me on Instagram at Aid to Assets. Don't forget to subscribe, rate, and leave a review. Until next time, happy investing.